Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, Yatin, the trend that we have been witnessing over the last few days didn't really hold true today, given the fact that the Nifty has ended below that 19,400 mark. We didn't really see any kind of rebound coming in the late hour or the last hour of trade today, and because of which, of course, Nifty below that 19,400 mark. And if you look at the broader markets, both the Nifty mid and small cap indices have managed to shut shop in the green, even though with marginal gains. Let's talk about the sectoral movers then. FMCG and IT were the top drags, but PSU Banking Index has gained nearly 1.5%, and Consumer Durables Index has also gained somewhere around 1% or thereabouts. Among the top, performers on the Nifty, you had Adani Ports. I think there was a small bulk deal in Adani Ports, 1.5 million shares or 0.1% stake exchanged hands today. And after that, I think post midday, the stock picked up steam and has rallied somewhere around 4% or thereabouts. Aside of that, you had the likes of Titan, Bajaj Auto, SBI, Tata Consumer, Hero MotoCorp. These were some of the top performers on the Nifty in a weak market. But if you look at the losers, ITC, that was the top loser. Power Grid, Divi's Lab, L&T, Reliance. So all these heavyweights under pressure today. Aside of that, Yatin, since I was mentioning that the mid-cap index has managed to shut shop in the green, there were quite a few movers today. Once again, stock-specific movers on the mid-cap and small-cap end of the markets. Take us through them.
So, if you look at the mid-cap index, clearly was quite buoyant. In fact, the mid and small-cap indices both were gaining almost 0.25% or thereabouts on the higher side. Top gainers on Nifty 500, we had Apar Industries, that stock moved up 10%. Amber Enterprises and Kochi Shipyard continued the rally. In fact, Kochi Shipyard yesterday was up almost 15%, and now if you look at today's trading session, the stock ended by nearly 8% higher. GM Financial and Latent View Analytics were the other stocks which were moving in trade. What was not doing well is the likes of IRFC, and there were news reports which indicated that the government is looking at a stake sale in few railway companies. So IRFC witnessing some bit of profit taking, stock was down 7%. Indian Overseas Bank, yesterday the stock moved smartly, but was one of the top losers today, down 4.5%. JSW Energy, and remember GQG bought shares in JSW Energy from the promoters as well as via various bulk deals. Post that, the stock witnessed some momentum, but today the stock was down nearly 4.5%. So some profit taking coming in for all of these names.
Well, those were all the movers and shakers from the mid-cap end of the markets. And, on that note, let's take a look at some of the stocks that are on our radar. And on my list today, the first one is, of course, from the mid-cap index itself. Bata India, that stock was printing away in trade today, up somewhere around 6% or thereabouts. Of course, CNBC TV 18 sources suggest that it may be in talks with Adidas for a strategic tie-up, and Adidas may tie up with Bata India for Indian market itself, and the talks are likely at an advanced stage, and they are still working on the contours of the deal. That's according to CNBC TV 18. In fact, if you look at Bata, it has a strong network of somewhere around 2,100 stores, which is spanning across 700 cities across the country. And this bit of news has come at the right time, given the fact that it has recently started trials of its sports apparel as well, and it has in fact the focus on sneakers has helped achieve steady growth for Bata, which is why it has decided to also test waters in the sports apparel segment. The management in fact did state in the AGM last week that they will be focusing on premiumization and casualization going forward, and they have also earmarked somewhere around 100 crore rupees for expansion for the rest of the year. Now, the primary objective of the strategic tie-up with Adidas, of course, is the fact that Adidas wants to leverage Bata's extensive retail network across India. As I mentioned, 2,100 crore, I beg your pardon, 2,100 stores across 700 cities throughout the country. So they want to leverage the reach that Bata has, and that's why they are mulling a strategic tie-up. But if you look at Bata as a stock, the trailing PE, 12-month PE is somewhere around 72.5, which is cheaper than Relaxo and Campus Activewear. And if you look at the stock over the last 6 months, I think it's up somewhere around 20% or thereabouts. And today's move has ensured that Bata has edged back into the green on a YTD basis.
Absolutely, and the stock of Bata post the CNBC TV 18 news break was up as much as 6% in trade. But what was also moving in trade was REC. Now the stock was up on the back of the analyst meet which got concluded yesterday, but a lot of brokerages in general have been bullish on the stock of REC. Elara yesterday in its initiating coverage note expects a 41% upside from the current market price, despite the fact that the stock has run up by nearly 50% in the past few weeks. If you look at the stock, that is trading at a 25% discount to its forward price to book, which is the book value. Now, Elara believes that from here on, the entire loan book for REC can grow nearly 1.5 times by FY26, and the renewable business, non-power and discom segments will drive the loan book for REC moving ahead. In fact, they also expect the NPS to halve from the current levels, and also they expect a recovery of nearly 7,000 crores for projects which are going under the NCLT process, as well as various other resolutions. So, on the back of improving asset quality, improving yields, as well as improving business prospects, Elara is bullish on the stock of REC. In fact, REC has seen unprecedented growth in the power sector and the lending to the power sector in the past as well, but obviously it hit a dead end after a lot of projects went under the NCLT. Now, a lot of brokerages believe that overall the lending to the power sector for the next 3 to 5 years could be as high as 1 lakh crore rupees. So, that is the kind of kitty one is looking at. And if you look at 1 lakh crore as the potential loan book, this means that there could be a 15% CAGR for power lending companies like REC, PFC for the times to come. In fact, most of the brokerages do expect some improvement in the financial health of discoms, which are the state distribution companies, as well as reduction in the transmission and distribution losses, which contribute to most of the losses that these discoms make. And the government has also done a lot of reforms in the power sector in terms of installing smart meters, initiating the Kusum project for farmers and their solar pumps. So, a lot of things are happening in the power sector, especially on the renewable side, and obviously reforms are also improving the overall health of the sector. So, probably REC is one probable beneficiary of the entire growth which is expected to come in the forthcoming quarters for the power sector.
Right, and if I'm not mistaken, REC was also included in the MSCI Global Standard Index, and that's why the stock has gained somewhere around 9% over the last 5 days itself. But let's talk about my next stock, that's JBM Auto. This stock was down somewhere around 0.5% in today's session, but yesterday it saw a very strong 10% rally coming in. Of course, it's the PM e-bus service, outlay that was approved by the cabinet yesterday to the tune of 57,600 crore rupees that boosted sentiment for most of these EV players, including JBM Auto. Now, PM e-bus Seva service will be launched with 10,000 e-buses across 100 cities to boost EV adoption. Now, this will result in higher order book for some of these EV players, including the likes of JBM Auto and Electra Green Tech, Ashok Leyland, Tata Motors, etc. And Goldman Sachs came out with a report today that and they've said that this scheme will lead to boost the already strong order book for some of these companies. Now, JBM Auto was on CNBC TV 18 this morning. In fact, they've said that over 3 lakh people stand to benefit from the scheme, and that they've also said that it should take somewhere around 6 months for cities to develop their strategy with respect to this scheme, and the process should start in 12 to 15 months, and the delivery of buses should start after 15 months itself. The company itself has said that they are well equipped with 20,000 electric bus manufacturing capacity already, and they are saying that they are waiting for the plan from the cities, and then they will plan their capex accordingly going forward. If you look at the stock, in the last 1 year, it is up somewhere around 250%, Yatin, and of course, this PM e-bus Seva service, of course, will boost order book for some of these companies, and that's why JBM Auto is one stock, one company that stands to benefit from this. But if you look at the PE, 12-month trailing PE, it's at 135x, which is much more expensive than Uno, Minda, and the others, Sona, BLW, and the likes. So expensive stock, but things of course bode well, given the fact that it stands to benefit from this very crucial e-bus service or Seva that will that is being rolled out to boost EV adoption.
Absolutely, and JBM Auto, Electra, Tata Motors, all of these companies have been benefiting from the electric vehicle revolution, and also the kind of mobility that the government wants to provide to smaller towns and cities in terms of connectivity via electric buses. Obviously, the entire scheme outlays more than 50,000 crores, in which the central government itself will be contributing close to 20,000 crores. So these were the few stocks which were on our radar today, and obviously we have more news and updates on our website moneycontrol.com as well as on CNBC Awaaz, and probably Nandita also has some updates for her morning show tomorrow.
That's right. Of course, we'll be getting all your stock-related queries answered by a technical expert on the show at 8:30 a.m. as usual. So don't forget to tune in for that. But for now, it's a goodbye from me and Yatin. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates.